morning, traders. Alla Peters on January 14th. I'm a bit under the weather, so forgive me. What I would like to show you in this video is identical price action, identical Fibonacci levels, identical strategy between drastically different instruments, and how Fibonacci identifies key exits in advance. This is S&P in live markets on 5-minute chart. This is S&P 40 minutes ago. S&P in pain, barely outside of the end of the minor trend. S&P danced at the end of the minor trend, decision point 1 for 2 days, showing you bullish trend is minor, S&P in pain. This morning we discussed that buyers fully in charge and we expect crawl to go on. This is what S&P did next. Anyone surprised? Should not be. This is absolutely expected. And if you're looking on S&P right now in live markets, what do you know? Bullish push overextended, price in pain. Monitor for reversal when price comes so close outside of decision point 2 and so close to reversal zone. This is exact same thing VIX doing right now. No one should be surprised. This is not the place to buy. This is a place to exit. And if you knew this extremely well, on VIX, just to remind you where VIX was 5 weeks ago, in exact same place where S&P was early this morning. Fibonacci identified this level in advance, just like on S&P. What is the difference? This is weekly chart. This is your long-term investment decisions. Hedge fund managers I work with trading VIX. Day traders I work with trading S&P. Choice is yours what you want to trade. But if we look even a little bit more carefully, we also remember that oil looked exact same way. Do you remember oil in 2018? Charts are twins with 5-minute chart of S&P in front of you right now. If I remove the name from the chart, you would not have a clue. Is this oil or is this S&P? Looks exactly the same. Why? Because price action remains the same. So if you understand price action, you can trade S&P, you can trade VIX, or you can trade oil. Because as expected, oil crawled up to reversal zone. What do I say? 64 is next. When oil reaches 64, oil walks through a lot of pain. But what is oil reminding you? This is not the place to buy. This is a place to monitor for reversal. Did oil do this? Of course. Started selling off. What do I say when oil at 60? 50 will follow. Did oil do that? Of course. Continued crushing. As expected. And this is oil now. What did we discuss? The 42 is out, 40 next. Oil respected 42 and that's where it bounced from. Oil sitting right now at key Fibonacci resistance. Knowing what to do with your position is the key. And that's exact same thing that oil had done, all identified months in advance. Not the place to buy. When oil started selling off as expected. So, will S&P do the same? It will be a gift. Not the place to buy. Chart present in front of you for weeks. Where S&P had been dancing in brutal chop, in brutal correction since a week ago. Just like oil first did until it started selling off. So S&P right now testing indicator-driven trader to the core. Indicator-driven trader is in pain. If price is dancing in correction at overextended bullish rally, doing absolutely nothing, knowledgeable trader not touching this. Knowledgeable trader not having sweaty palms. Knowledgeable trader not interested in pain and torture. So, if S&P is gonna sell off, just like oil done, just like VIX had done, it's a beautiful thing. Here's another reminder. How knowledge of price action show you that you can trade anything you choose, because every single instrument price action remains the same. This is Netflix after earnings. Poor thing. Spectacular earnings don't mean a thing. Fibonacci means everything. And this is Netflix 10 days later, after earnings. Sold off $140 per share. Do you want to trade on earnings? Do you want to trade on indicators? Or do you want to monitor for short? Shock or not, just like Netflix. Daily, just like VIX weekly. Just like oil weekly, S&P starts selling off. It's a beautiful thing if you master price action. It's a beautiful thing if you know where your trade entry is, if you know where your stop and target is. You do not speculate. You do not have sweaty palms. You do not chase indicators. And here Netflix now. Netflix sold off from boom 405 to, my goodness, 230. Ouch. Netflix said it's 7 million subscribers and went into free fall. Just like oil. Just like VIX. So do the math. From 403 to 230. Ouch. Almost $190 per share. Do you want to trade this? Or do you want to be knowledgeable price action trader? Choice is yours. S&P in pain. No reason to pull a trigger yet. Reason to wait for rules to be met. And only then you can take a trade. Rules are not met. Do not touch the markets. And this is the only way to succeed. Because success formula is exactly the same no matter what you do. Be knowledgeable at what you do and know how to execute. And the skies are the limit. 3 key components before you become successful are the key. These are 3 steps every single successful graduate had done. Be focused on mastering price action. Give it maximum effort. And when you do, execute properly. The skies are the limit. Unlike oil, unlike Netflix, unlike VIX, S&P remains in pain. And if pain remains, no reason to short this market. Only if rules are met, you can take a trade. And so here we are, hour and a half later. S&P 5-minute chart. S&P any chart doing exact same thing as oil, Netflix, VIX had done. Selling off because price action and Fibonacci said so. This is not the place to buy. Market being here for the last hour and a half. What does a knowledgeable trader knows? This is crucial support, cannot short. Price action identical on every single instrument you trade. Only rules are met, take a trade. What is the difference? Risk management and trader psychology, account size. Do you want to be in the trade 5 minutes, 5 hours, 5 days, 5 weeks, or 5 years? Choice is yours. VIX, oil, Netflix, and S&P. They're all the same. Success formula, always the same. So, stop chasing indicators, pay attention to pure price, and if you do, you will not care if this is Netflix, if this is oil, if this is S&P, because it all looks exactly the same. Rules are met, take a trade. Do not pay attention to anything else. Respect news due to volatility. And never ever ever acquire position outside of decision point 2. If you do, trading with less than 20% success rate. Rules are met. Take reversal of the trend, not trend trade. And again, reminder, this is what you master in the course, pure price. And if you do, you can trade anything, because these 2 charts look exactly the same. But the fact are, no one will ever know what you're looking at. No one will ever know if this is Apple, if this is S&P, because it's all exactly the same. This is S&P, as you know. However, what is this? No one knows. Looks just like S&P, looks just like oil, looks just like VIX, looks just like Apple, looks just like Amazon. It is Netflix traders. Charts are twins. So, go to the source, what indicators developed after. And if you do, and you master pure price, and you know how to apply Fibonacci levels, your pain is over. Your chase is over. So join us in any of the courses that's appropriate for you. You want to take it slow? You want to master foundations of the method? Start with foundations. You want it all? Foundations, mastery, and everything? Dive right into mastery. ultimate way to learn when I work with you one-on-one. Private mentoring includes all group courses, all videos from prior classes, and if I see that you became master of the method, I will teach you even more as I constantly develop new strategies. The sky's the limit to how much you can learn. Most important part, what students do, what students accomplish. As you can see, traders from beginner to hedge fund manager trading the method. And if beginner trader like Pablo can do it, so can anyone. And if Brett, who had been trying for years, can do it, so can anyone. Choice is yours, how much effort you can make. And if you do make an effort, the sky's the limit. So, do not hesitate to contact me 925-257-4298 or info@fibinstitute.com. Look forward to speaking and working with you. Because every single thing you learn applies to any instrument, any time frame, any platform. It is absolutely up to you what you will choose to trade. And that's the key. Choice is yours.